Good evening, everyone, and welcome to week 7 of your Web3 and Crypto Basics Trading Bootcamp. And tonight, you're going to be led by Renee for the Crypto Trading Bootcamp. We've been running this live for the last 7 weeks. If you found this recording or if you found your way to tonight's session and you haven't been following along, don't worry. Everything is recorded and you can sign up for 100% for free. I'll actually drop the link to the sign up page in the chat in just a moment, but you can also just scan your phone, scan that QR code on the screen, and that will take you and you'll get access to our education hub that we're building out. And we're doing this in partnership with some of our community partners, EvolvH3R, Jana Crypto Queen, All Things Blockchain, and Insightful. We're actually going to be working with Insightful to add in a TradFi to DeFi course. So there's going to be a lot more content in there as we build it out. For those of you that don't know me, my name is Danielle Marie. I am an educator for the last 5 years. And I've decided that to finally build our own education hub for ATB. So lots more to come. I'm just going to go through a few things before I hand it over to Renee, and she's going to be taking you through, I believe it's her strategy. There's many different types of strategies out there that you can follow. So she's going to take you through what she does and what works for her. It's really important that you find the best strategy for you. But before we do that, just going to go through a few quick things. As I mentioned, all of our sessions are recorded and they are being shared into the group at the moment. And then eventually we'll be sharing, putting this into on demand. So you can keep inviting in your friends that want to learn about crypto trading. If you got a lot of value out of, following and learning from Renee or from myself, you can share that with them. We'll be putting those on, all the recordings are in there, and then they'll be in there as kind of on-demand courses next month. All right, quick warning, if you're new to crypto and Web3, it's going to be information overload, especially if you've been following us for the last 8 weeks. I'm sure your brains have been exploding. We call it the crypto rabbit hole. It is an interactive program, so you can jump into the group. There's a ton of different students that do go in there and post. You earn points, you can interact. I call it peer-to-peer learning, so please get in there and interact. And just be careful, scammers are everywhere. We actually just had one of our team members, I haven't even had a chance to look at it, but apparently there's a significant hack or something that's going on at the moment if you play in the DeFi space. And we're going to post about it to try to warn people, but you just got to be careful. And that's not just in crypto and Web3. This is with deep fakes, AI, just everything. And we're actually going to be coming out with a more in detailed, I did have an online security lesson, but we'll be bringing out one that's much more in depth to really help people be safe online. So quick disclaimers, all the information, especially the trading advice, it's not advice, the trading education, it's not financial advice. We are not recommending that you buy, invest, or trade. We recommend that you do all your own research, and all of our sessions are recorded. So before I hand it over to Renee, I'm going to talk about events. We host a lot of events between our communities. So All Things Blockchain, we have some overseas. We're going to Token 49, and then our next one here in Brisbane, which we call them hybrid events because they're all recorded, so you can tune in live into the live stream. And then we will be at the Australian Crypto Convention in November. We're just working on those details. And then same with EvolvH3R. We'll also be at Token 49 at the Australian Crypto Convention, and we do a lot of online events as well. So you can sign up to our Luma calendar links to get updates on all of those events that we will have coming up for you. So with this bootcamp, we have gamified it. There are some great students that have been in there and interacting, filling out the weekly quizzes that where you get points. You get points for, posting. And then if somebody likes or comments and engages, you get points. And we have some prizes up for grabs that we will be, next week is our last week. So we'll find out who the winners are at the end of next week. We'll probably give everybody 1 week afterwards, and we'll announce the winners in week 9. But we've got some USDT up for grabs. We've got some Bybit merch. We've got some tickets to the Australian Crypto Convention. I actually even have some tickets to give away to the conference in Miami. If there's some of our global audience that's on that side of the world. So if you're not in Australia, we've got some tickets that we can give away there as well. And then we will be launching our mentorship program. And so there'll be a scholarship available, either whether that's for yourself or because it will be for women and non-binary folks. So if you are a gentleman that wins, that's not a problem. You can gift it to a lady in your life that would maybe be interested in learning more. So before I hand it over, if you are just starting with crypto trading, we always recommend demo trading. Bybit's got great demo trading. Renee has been taking you through all of that. I'm sure she's going to be even showing you some of that in today's lesson. So please always just make sure that you're using a demo account. So we are up to week 7. As you can see here, we have gone through a lot. You can join the group and you can get access to all of that. And then next week, she'll be finishing it off, talking about psychology, journaling, building out a training plan. Same with the Web3 basics. We're going to be talking about dollar cost averaging, how you can set that up, different platforms, different ways that you can do it, and investing mindset so that we can really set you up for some success so that you can go and apply all of the learnings. So that is it for me. I do see that Sandra just popped in, and you probably missed. I'm not sure if you saw my comment to you, Sandra, on LinkedIn, but I have some tickets to give away to some students to the Blockchain Futures Conference in Miami. So if you want one, your name is all over it. Okay, so you just let me know. I'm not sure if you've. I haven't seen if you saw my comment yet on LinkedIn. All right. That's it for me. I'm going to stop sharing and hand it over to you, Renee.
Yay! Awesome. Thanks, Danielle. And yeah, thanks so much, everyone, for joining us. And so, yeah, week 7, how the time flies when you're having fun. Let me just share my screen. So here we go.
Do me a favor when you start, just say welcome to week 7, because that's where she cuts it off.
Okay,
like, she'll edit that whole part out that we've just gone through.
Okay, perfect. I'll start from here. So, because now I've got everything set up. Everyone can see my screen. Good. Everyone. Yep. Thumbs up, guys. Awesome. So everybody, welcome to week 7. So this is week 7 of our 8-week bootcamp. We're almost at the end. And tonight we're going to go through my personal trading strategy, which I've called Artemis Alpha. Artemis because as of many reasons, but like long story short, I used to love Sailor Moon when I was a kid, and Artemis is one of the cats, and Artemis is also a Greek god, and it's also part of astrology and all that sort of stuff. So I just thought it was really cute, and so I called it Artemis Alpha. That's pretty much all it comes from. There's no other kind of funny thing about that, because everyone kind of has their own trading style, and then a lot of people will try and brand it their own certain way. So this is just a compilation of a bunch of different strategies that I've put all into one strategy. So I've taken bits and pieces from a number of different traders that I've traded with, that I've learned from, that I've followed over many, many years. And I've put them together to form the AA or Artemis Alpha strategy, which is, for me, it's a strategy trading in both the Asia session and what we call the London session, so the European session. So coming from Australia, where I'm based, it's most of the time everything is really based in New York. And so it's really difficult to trade a lot of the time when New York is like when everything happens. So I've tried to avoid over the many years to try and avoid trading New York. So for example, if you guys are not in Australia, New York doesn't open until 11:30 p.m. So it's almost midnight by the time New York opens. So for any sort of normal people who've got a normal life, got another job, you've got basically any sort of life, it's very difficult to consistently trade the New York session unless you get no sleep. And so I went through many, many years of doing that, of not getting any sleep and staying up until 2 or 3 o'clock in the morning. And it's just, you can do it. I think if you're young, you found a lot of traders who are younger who love this, who can stay up all night. It's great. Just for me personally, it doesn't work for my lifestyle anymore. I can't afford to stay up until 3 o'clock every morning to trade. So over these past few years, I've developed a strategy that works based on trading in New York and sorry, not trading in New York, based on trading the Asia session and the London session. So as like always, I'm going to go through really quickly all of my slides, give you a really big overview of what we're going to look at, and then I'm going to go right into the charts and we're going to do the practical activities right into TradingView. Awesome. So basically just the things we're going to go over really quickly. What are the trading sessions and the timing of the trading sessions, how to define the Asia session range, using the PVSRA candles like we had before, using them into creating the formations that we're looking at the entry and exits, things like where you want to put your stop losses, all that sort of thing. And then going over our weeklet market maker cycle and how the market makers move throughout the week. Awesome. So basically, yeah, so trading sessions. What are trading sessions? So trading sessions, as we've gone over previously, and I'm going to go back into the market clock as well, so you can see that again. When you come to trading, while the crypto market is 24/7, 365, like it is a 24-hour market, it never stops. The majority of trading moves will only happen at very specific times of the day. And these are generally at the open and closing of the Asia session, the London European session, and then the New York session. So if you can just trade those 3 times of the day, you're going to probably get 80% of the moves of that. If you could trade 24/7, you're going to get 80% of your moves in those 3 changeover session times. So I learned this the hard way as well. Like I used to watch the charts for 12 hours a day, and like for the majority of the day, nothing happens. So if you can really streamline it and just make yourself available to look at the charts in these particular time frames, you're not only going to get better trade setups, you're just going to save time because you're really not going to get the majority of those moves outside of those session times. In general, the Asia session is a consolidation session. So the Asia session itself doesn't really have a lot of big moves usually. It is usually a consolidation, but we then use that Asia session range to then make another move into London. The London session, you'll generally get some sort of breakout or some sort of movement. So this is why we're looking at the Asia session first to make our trade in London. And then New York is almost always something crazy happens. So the big moves of the day will always usually happen in New York. Like, again, like 80% of the time, the big moves are going to happen in New York because number one, the news always comes out in the American market session. So it comes out right before the American market. So those always cause big movements, or in general, just the US Open that's just really when the big moves usually happen in the US market. Okay. So this is an example of the Asia session box that we're going to go over. So this is the basis of all of my trading foundation. So I'm going to show you how to draw this box, the timeframes that we use, and the sort of movements that we're going to look at inside of this Asia session range. So again, we're going to go over using the PVSRA candles, using our colored candles to show different moves. And these are very important to see these colored candles inside the moves inside of the box, and as you'll see it when we go on. We'll go through using the MACD and the SMI to show these divergences that we're looking for, to create these confluences, to create more confidence in the trade moves. So using the zero line cross, all this sort of stuff that we've gone over before. And also we've got our EMAs and our VWAPs as well to create more confluences when we're doing our moves. We'll also go over using our vector candles, so using these PVSRA candles to create our target profits, our profit targets, our TPs. And as you'll see here, I usually do manual TPs as they move through these periods, but if you want to, you can use these sort of vector candle recovery zones to create your TPs as you move upwards. And then, yeah, so we're going to go over the market maker cycle. And so in general, we think if anyone's heard of Elliott wave theory, it's kind of similar in the way that the waves move, in that it's like 3 waves up and then 3 waves down. So Elliott wave is usually a 5 up and then 3 down, whereas we're usually a 3 up, 3 down. And so usually when the week starts, we go through a Monday false move week beginning. So a majority of the time, like a lot of the time, what you'll see on a Monday is you'll actually get a fake out move in the opposite direction to the direction the market maker is actually going to move that week. So on Mondays, generally we're going to look for some sort of false move before we actually move into the real trend. This can happen either on a Sunday night or a Tuesday as well. So again, this is never perfect or set in stone. So from Sunday, Monday, Tuesday, we're looking for some sort of false move into the correct direction that's going to go for the week. And then we usually get 2 days in one direction. And then we get some sort of midweek reversal period, which is usually on a Wednesday or Thursday. And then we're going to get some sort of like M or W reversal formation. And then we're going to get the following move. So in general, it's like a triangle up or an upside down, like a V bottom that way. With Friday showing a continuation. But again, a majority of the time, when you move into the weekends, you get sideways chop. It usually going into Friday, so something crazy might happen, like with a news event. But other than that, Friday is not usually creating or starting a new trend. It's usually going into the consolidation period for the weekend. Awesome. Sweet. So let me switch to find it. What screen am I on? There it is. Okay. Let me put you guys in here. Put you up here. Awesome. Okay, making sure I can see you guys. Can everyone see my screen? Everyone can see my chart? Yes? Thumbs up, perfect. Awesome. So this is my beautiful, crazy colored chart. We're on the 5-minute chart just right now, just to show, because they're hourly periods. And this is going to be this Monday. So we're starting on Monday, starting on my chart, and I'll show you exactly how to do everything. So firstly, what I want to do is I'm going to draw my box. So if you're in Australia, it's from 11 a.m. to 11 p.m. So this is the period of time that you're going to be drawing your box. But you're going to be drawing it at 3 p.m. So the Asia range in Australia is created between 11 a.m. and 3 p.m. So it's that 4-hour period. So if you can see down here, I'll change it to, UTC. So this is London time. So this is London time. So in general, like if everyone thinks in the world, London time, it's, there we go. So it's must be daylight savings in London. So it's usually 0. Yeah, UTC +1. So they must have daylight savings right now in Europe. So right now in London time, it is 2 a.m. to 2 p.m. if you guys are in Europe, or if that helps you to kind of think about it that way. Let's just do it in New York time. What is it? This one? Yeah. Do it in New York time for people in America. Where is it? New York. Awesome. So it starts at 9 p.m. to 9 a.m. Yeah, that would be correct. So if you're in New York time, it is 9 p.m. to 9 a.m. So what we're going to do is we're going to start here. And it is now, let's say, this is, again, you're in New York. You're not going to be up at 1 a.m., but you need to wait for the range to establish itself before you can create this box, because obviously you won't be able to do it before that. So we come in, going to draw our box, and then drag it out from 9 until 9. Perfect. And then you can choose your own colors here. These are just colors that I like to use, that I'm just used to. So my Asia box is blue, so I create my Asia box. And so this is our Asia range. So now what we're going to do is we're going to draw our London range. And I'm actually going to do it back to here. So this is actually what it's going to look like when you're drawing it. That's probably a better visual. So we're coming in, this is the day. So this is what you're going to be looking at when you're drawing your box. The next thing we want to do is we're going to see where London is going to start. Let's show you so I know what I'm doing. Which is 5 o'clock in Australian when London opens. And then the London session is from 5 p.m. to 8 p.m. So this yellow box is what we're going to be looking for the action to happen. So basically step 1, define the Asia session, figure out what's going on, and then we wait for the London session for something to happen, and then that's when we take that move. Excuse me. Oh, my voice. Okay, great. So for me, looking at this today, what you can see is that this would probably be what you call a consolidation day. It's not doing anything. It hasn't made any big push in any direction. So what I like to do is I draw some trend lines, which will help to kind of show if there's any sort of trend forming or anything happening. Again, feel free to change the colors, but this for me, green obviously being an uptrend, red being a downtrend. So there's not really anything happening. It's really just consolidation inside. You can even call this a triangle pattern. Nothing's really happening. We do kind of have a W formation here. So that could be something interesting. But as of right now, there's nothing really happening in this day. We're going to have to wait for something to happen in this Asia session end and then into the London session for something to happen. So let's have a look. And what do? We got to break up. So you can see right in this consolidation period, we've got almost a fake out move down, but this is all really, really like tightly packed our EMA. So we've got the 200, the 50, we've got the 800 and the VWAP all tightly compacting. So that in itself is showing that there's probably some sort of move about to happen. So when they all really tightly together, you could keep an eye out for something to happen. And what do we get? Big green push up. So looking at this is probably a really good confirmation that this is the move that we've been waiting for. Because if you look all day at these moves here, there was no big green candles. There was nothing really, and there was red candles pushing it down. So what you're seeing is that the market makers are pushing it up and they're pushing it down and they're pushing it down and they're consolidating it here. And then the green candles come in over here, and the green candles come in and they push and they push. So this is the market manipulation that we've always talking about. They are creating these formations on purpose because they know we can see them and they want us to think a certain thing. So when you're seeing all this movement, you might be tempted to go long here, but there's no green candles. So there's no real strong inclination that we're going to go up. And what do we get? Big green candle here, green candle, green candle. This is the movement that they were looking for. So this is the confluence of using the vector candles when we're seeing movements outside of these positions. So let's have a look at our two main indicators, our SMI and our MACD. So what do we have here? This is our favorite, isn't it? So that's your low there, lower low. So we're watching this in the morning. We've got our W formation. So this is already probably going to give us an inclination that we're going to go up. We've got our bullish divergence. So this is already saying this is probably going to keep going up, but we don't have our confirmation yet. Because again, there's no green candles here. There's not really any sort of big movement here. This is the confirmation that we've been looking for. So once we've got this, confluence one, got a breakout of our triangle here, coming out of our SMI, so pushing up. And then we get pushing up here on our MACD, and then pushing above the yellow signal line. That's all very bullish confirmation, showing that all indicators are going that. Let's actually jump up to a higher time frame to have a look. Yeah, and so you can even see it on the bigger time frames as well. So this is your bullish divergence. So first signal coming up here, and then we're getting our big green candles pushing up. Awesome. So awesome. That's day one. Does that make sense, guys? Was there any? Let me have a look at some questions. Sorry. Okay.
I have one question.
Yeah.
For those that aren't for our global audience, would this strategy change? Like, would they have to find a different strategy if they're, because obviously they would be awake during like the New York Times?
Yeah, so it works differently for New York. So this is a session like if you were to come in to trade, you wouldn't be able to use these ranges because the move would have already happened. So if you're coming in at New York session, you're coming in over here. So all these moves would have already happened. It doesn't really work the same way. New York kind of works its own very, very different way. It does have some sort of relation to the way London moves. So if you wake up, if this is really specific to using Asia and London. So I mean, all of the sort of other stuff apart from the range, you can use you can find a triangle formation anywhere. You can find these W formations anywhere. Like these breakout formations you can find anywhere. The specific stuff about the Asia range is very specific to the way Asia and London relate to each other, if that makes sense. So you could use all the other stuff, just not the range stuff. If that makes sense.
Yep, perfect. Thank you.
Guys? Yeah.
I think Nick's got a question in the chat there for you.
Yeah. So in general, what we like to say, Asia's role in the way that the pattern moves is generally to consolidate. So most of the time, Asia goes sideways. It really doesn't. Most of the big moves are going to be either in London or New York. So in general, that's why it makes it really difficult to trade in Asia, because most of the time it goes sideways. So if you're trying to trade big moves in Asia, it's very difficult because they don't happen very frequently. They do happen, but what I've learned over these many years of trying to trade during the day in Australia is that unless you're using super high leverage and really short time frames, it's very difficult to get big moves in Asia. So this is why, in general, the way that this particular method works is that we watch what happens in Asia and then we move, because in general, Asia goes sideways and consolidates, and then you'll see the pattern afterwards, if that makes sense. Cancel one. Yeah, so I mean, with this, so say you saw this triangle pattern formation happening, a lot of people will like do like a hedge position. So you could open a long one way and a short the other way if you didn't know which way it was going to go, or say you couldn't wait or like you couldn't watch it for whatever reason, but you saw this triangle formation happening, you're like, I know it's going to break out. You can create a hedge position, and you can do that in Bybit, which means you can create opposite positions. And so if it goes one way, it'll trigger. If it goes the other way, it will trigger. So you can do that with hedge mode, which you need to be able to turn on into Bybit. So I can probably go and figure out how to do that later. I haven't done it for a while, but I'm sure there is a way that you can turn on hedge mode, which means you can have long positions and short positions. Because in general, the way that Bybit standardly works is that if you create, so say you have a long position, if you create a short position above it and it hits that short, it will sell it for you. Because a lot of people use that for their take profits. It's basically a limit short. So this is the way that you can go in and save on your fees, because you're creating these limit orders at certain take profit points. And that way you don't pay the market fees. So people will use short orders to close their long positions. But there is hedge mode, which means you can have a long position and a short position on the same thing at the same time, and they won't cancel each other out, because naturally they normally cancel each other out. But you can do that. It is possible, yes. And you can, yeah, at the same time. Cool. But in general, yeah, you wait for the breakout. You can always take an aggressive entry, but then you risk getting stopped out. So depending on your risk profile, it really depends. Like you could take a super aggressive entry. So say if we go down to like the 1 minute chart. So say you're trading the 1 minute chart. Because like, oh, you're looking at this. Oh, it's going to break out. Oh, wait, what is this? This is an M formation. So if you're in the 1 minute chart, oh, it's going to be too hot now. Where are we? Now we're on the 1 minute chart. Where are we? So this is where we are. If we're trading on the 1 minute chart, we're looking at this. We're like waiting, we're just getting the consolidation. Oh, we get a fake out. Oh, see this, I mean, oh, it looks like it's gonna go down because of all these fake outs. I'm gonna go short. So getting towards the end of the trial, we see this. We have, it's not great, it's not perfect, but we do have market maker candles here. We do have what we call, a stopping volume candle. This is like the fake out candles into a thing. You could go short here, but it hasn't really broken out. And there's not really a lot of confirmation right now. And what happens is that it reverses completely the opposite way. So because there's no confirmation of the move, like this is kind of like, this is a lot stronger. To see this sort of push, that's a lot stronger than this. And you've gotten into early. So this is the sort of things that we're looking for. See, the green candles, they're not really breaking strongly through the 50 here. Like, let's have a look at I mean, you do have a little bit of divergence there. You got an M formation, so it's like there are some sort of indications that this could be strong, but there's no confirmation. And then once you get these really big kind of pushes up, that's a bit more confirmation because you've broken out of the triangle. So you can always take these moves, but because there's no confirmation, there's risk. So you're more at risk of getting stopped out. But if you have good risk management, you could do a bunch of these and it not really matter, and you then get a really good entry. So as opposed, if you were taking the short here and got in here, the confirmation would have been better to come down here and to get in down here once it had kind of broken through. That would be more safe, but then your entry is going to be riskier because your stop loss is going to be further away. So you've got to have increased risk because your stop loss is further away. If your stop loss is here, you have a very, very small amount of risk, but you're more at risk of being stopped out if you're incorrect, if that makes sense. Does that make sense, guys? Awesome. Let's go back up here. So, and what do we get? We get this nice move up. So this red box here is a vector candle from last week. So as you can see, as we go through, it does end up getting fully recovered. So these are the sort of take profits that you'd be looking for if you were looking to use manual take profits. For me, in general, because it's a short-term trading specific style, what you say is that you usually like to take your profits or most of your profits before New York opens, because once New York opens, anything can happen and it's completely like, you know, news happens, just anything happens in America and you're asleep, something happens. So in general, you want to take your profits around here, which is like the Asia session before New York opens. So if you'd gotten in here and say we'd gone long here, and then if we got out here, which is like, that's a 1% move. So on Bitcoin, that's actually a lot. And if you, like me, are using the super high leverage, that's 100% profit in, what's that? 8 hours. So like between 6 and 8 hours, you can make 100% profit on whatever you're trading. And you just do that like 2 or 3 times a week and you can make pretty consistent money, because you will only get these moves. The big moves like this don't happen all the time. A lot of times they will happen in New York, but if you can like watch this formation, get in this like right when London opens, catch that move, that's a 1% move that you've caught in that. So we're actually going to go back to last week. I ended up doing all of last week so we can see how everything went. So, awesome. So we did go over this one last week because this is the big move that we caught last week. So going through it again, this is last Monday, which is Monday the 1st. So if we're in Asia, it is now, let's say 3 o'clock in Australia. I've got my Asia range. We have a very strong trend at this point. And so what I've done here is basically just showing the trend. I show the trend between the start of Asia and the start of London. And so many times I've seen this trend happen. If you have a strong trending move in Asia, it will follow this trend, which is from the start of Asia to the start of London. And then something will happen. If it breaks through this line, it's usually a good signal that there's going to be the reversal. So if you guys remember from last week when we went over this, what we actually got here, we have our W formation with just this tiny little wick down, which broke the Asia range. So this happens so many times that you'll see them just break this Asia range and then reverse. So what have we got again? We got this W formation with our vector candles, got a fake out candle down, we got our big pushes up, big green candles pushing through the 50. And here's our, so this would have been a really good entry if you were watching at 3 o'clock. if you caught this would be a really good, very aggressive entry. And I'm pretty sure I got in here. So it was like, got this, and this is what we call the break and retest. So you're breaking through and then you get a slight pullback, and then we have this bounce off the 50. So this here would have been a really good, strong entrance to get this next move. Then ended up coming through in London. And you see, like when London opens, this is London open, it's like boom. So if you were watching, this could have even been a really good entry if you see this pushing through really strongly. If you missed out here, you could have got in here with your stop loss down here. And then it's a bit riskier because there is more of a gap for your stop, especially if you're using high leverage. But when you see these big pushes with all of your indicators and the confluences again, so this one again, we had got that push up there. We've got like, again, see how this is going down here? And then even on the SMI, it's coming up. So this is what we're calling the divergences that we're looking for. So when the chart is doing one thing, but your indicators are doing something else, that's a really good signal that you're going to get that reversal, because as the price is going down, the indicators are showing the indication to go the opposite direction. So we're looking at this move happening. So it's just another confluence that we can add to the conviction that something's going to happen. So let's go. So if we'd taken this move, even if we just got it in London, that's 1.5. So again, this is only Bitcoin. A lot of this sort of stuff you can then transfer onto smaller coins if you want to. In general, I only trade Bitcoin just because it's just so much easier, especially if you're using higher leverage. You can still get really good returns, but you only have to look at one chart. So let's have a look here. So this is the next day. So let's go back to here. So here's our Asia session range. Here's our London range. And what we can see here is until 3 o'clock, we've got a really strong move and a really strong move up. And so what do? We draw our trend line up. Cool. If we want it to keep going up, it's probably going to keep following this line up if it's a strong trend. But what do? It fails. And what do we have here? This is our stopping volume candle. This is our fake out candle. We got another fake out candle here. So this is already looking like it's weakening, like we're losing momentum. And we have another one here, which actually spikes out completely from the top of the range. And we've almost got little M. So this is more common, or what you'll see is the move happening inside of London like this, and then you'll get your reversal. So we've got our trend for the day. It fails, get the fake out, the vector candles, the colored candles, the break of the Asia range with your little M. It's probably a good chance that we're going to go down just looking at this way. Let's have a look at our indicators. And so we had the opposite of what's happening on the other one. So this is kind of going up. All of our indicators going down. So this is the negative. So this is bearish divergence. So price is trying to push up, indicators going down. M formation on the MACD, and then the same sort of thing, SMI going down. So everything's kind of rolling over this way. So we can kind of see that we're losing momentum to the upside. So this would have been a good chance for you to take a short position. What do we having? Boom. Oh, but what happened? That's so weird. This happens all the time. This is like what I like to call the fake out diamond. So I don't know if I can do a diamond formation. But basically what they love to do is take out the Asia low and then reverse it the complete opposite direction. So this move, you'll see quite a lot. And what we could have done to keep in the position long if we'd kept our long position from the previous day is that this is only Tuesday. So we had our fake out down, so we're pretty sure that we're going to have our 3-day continuation up. So when we have these moves down, we could assume that this is still going to be a continuation up. And so we probably wouldn't want to go long short yet because it's not the correct time in the week to be looking for that complete reversal in the pattern. So this is probably going to be a fake out and just the market makers manipulating you and just being stupid because that's what they love to do. Because they know people would have gone long here because this is Asia Open. People would have gone long here. They would have liquidated everybody from that entire day in this move because it's taken out everybody who's gone long here all day. So this is what they love to do, what they love to manipulate the market. It's just liquidating people. And what they've actually done, this is the low ADR. So the low ADR is the average daily range. So in general, Bitcoin only really moves about 1-2% a day. And it loves to kind of like bounce off of that of the day and find support and resistance. So it's something else to kind of keep an eye on. And it hit the high ADR and the low ADR for the day. So down here, you can see low ADR. It's also the psychological low for the week. So these are the levels that are established on the weekend. And so it's bounced right off the low ADR and the psychological low, and then just bounced straight out of there. And so it's not only liquidated all the people who went long, they liquidated all the people that went short. So this is just an absolutely textbook market maker move. Perfect timing in the market as well, right at the end of London going into New York. So this sort of move happens all the time, which is why in general, we say try to take your profits before New York opens. If you had taken your profits on this move and just taken this little move right here, that's a 2% move. So again, it's like we've made 1% on Monday, we made 2% on Tuesday, 2% on Wednesday. So we're already up, what's that, 4.5% this week if we just taken this one trade each day, buy and sell during these times. So it's very, very small percent, but if you can do it consistently over time, you can make consistent gains. If you had left this overnight, you're like, oh, okay, I'm going to sleep now. I'm just going to put a stop loss back up here. You would have lost all of that profit that you just made. This is a really good example of when you might want to use a trailing stop because say, oh, it looks pretty strong. I might, take profits, but then leave a runner. And so what you can do is do your trailing stop, and the trailing stop will follow you if it keeps going, but it might have stopped you out down here instead of all the way back up here. So that's a good example of when to use a trailing stop. Because yeah, this happens all the time. Sometimes it actually does it both ways. I've got some other examples in the video that I shared in the slides. It does this, so it goes down, it goes up, so it liquidates everyone on the bottom, liquidates everyone on the top, and then it will go back down again. So I've seen that many, many times, especially around this time period. This one, I believe, keeps going. Yeah. And so now we're going into Wednesday. So Wednesday is the time that we're looking for our reversal. So Wednesday and Thursday. So this is an example of like Asia session, just very boring consolidation day. Again, drawing our trend line. You can see how it follows the trend. And when we get this manipulation around the start of London, this is when you start to get interested. So all day, just going down, nothing really happening, nothing really exciting. And then what happens? Right at London Open, we get the W formation. Plus we get the manipulation. So this is, they like to do this a lot, like I've shown you before. this would have been your long entry if you were very aggressive. So this is like a long candle. But what do? They fake it out one more time to take out anybody who got in too early. They liquidate them and then they push up. So while something's happening here, if you got in down here somewhere, maybe you got in on this candle. See how this candle's not a green candle, it's just a white candle, but it looks like it's a W, right? So if we go back here, this shows you like why you always want to try and wait for confirmation. Because if you saw this and you're trading, you're like, oh, look, oh, I got my manipulation. This looks like a W. Yeah, I'm going to go long. It's breaking out, but it hasn't broken the 200. It hasn't broken the 50. It's nowhere near the VWAP. It's not a colored candle. It's the right formation. But what happens? Nope. If you'd come in and put your stop loss here, you would have got stopped out. If you'd put your stop loss down here, you would have got stopped out. So this is why you always want to try and look for more confirmation and more confluences to get into your position. So this could have been a really good aggressive entry because it's breaking the trend line, it's breaking the 50, it's breaking the 200 with a vector candle. So this is a more stronger entry position if you're going to want to go long. And then what do we got here? This is a safer entrance. So what have we got here? We've got back down, we've got a sort of retracement. So it's a retracement into our 50. And what do we get? This really big green candle push up. So this is definitely a stronger, safer entrance for the position to continue in that direction. And what do we get? Cool. So, this is 10:30. Yeah, I think there might have been news. It wasn't crazy news or anything, but that's around 10:30. So that is, yeah, so this, I believe, was some sort of news event. I can't remember what it was. Was it CPI? I have to go and have a look, but it wasn't crazy news, but it was enough to create the manipulation candle. So again, always keep an eye out. Let's have a look actually. I can't remember. Forex Factory. What was it? It was the Wednesday, September 3rd. Calendar. Yeah, so it was ISM Manufacturing, which is like the manufacturing showing production stuff in the United States. So it's usually not something that creates crazy news, but it's enough that they can use it for an excuse to manipulate something. And it came out lower than expectation. So when you're getting a lower than expectation read, it's usually negative. So what we're looking at right now is we have, it's Wednesday, so we're looking for a reversal. We've got manipulation candles here with a news event. It's not really super significant, but we've got a news event with the correct timing in the week. It's Wednesday. Manipulation candle up, another fake out manipulation candle up, big push down on the news. This could be our M for the week. So this is a really good example of why when we had the big pullback Tuesday, it's probably not the reversal that we're looking for. It's not the correct timing in the market of the market cycle. So this is more likely to be a push down in the market or around here. It's either going to be Thursday or Friday, but nothing is confirmed. So this is, again, just something to have a look at. I'm actually going to do, yeah. Cool. This is also a good time to have a look at higher time frames. Because what was it? So 15. Where is it? So 1 hour. Yeah. I thought it might have hit. Yeah, it did. So that was it there. This is now the 1 hour time frame, and this is a vector candle recovery so this is a vector candle from Friday, the 29th of August. We can see that there. So that is the vector candle area. And what do we get right here with our manipulation candle? We get a reversal here. So we hit that into that vector candle recovery, and we are getting resistance. So that's a good reason why to always have these vector candles or have this indicator. It will show you these areas of interest, which are really good ways to show you where you could be taking profits. So, we go back here. So, when we're trading our Artemis, if we see this move, this is really good. Take profit. Just take profit and just don't worry. It could be a reversal. Again, we don't have confirmation. But if we'd taken our profit there, gotten in down here, that's 8.85, so 85% move again, not quite 1%. You'd be happy with that. So that's your trade for Wednesday. So let's see what happens. Woo! See, another good reason to always wait for compliments for other things. Because what happens is you get this fake out move into the recovery candle, and then all it is a fake out move. And so they're coming down here, creating this level down here into New York, and then they push up. So always, always, always look for confluences. But this is another good reason why always have a good stop loss, because they love to manipulate the market like this because they know we're looking for these patterns and things like this. So they will manipulate you into thinking that it's going to go one way, but it will go the other way. So let's have a quick look at the indicators. Cool. Yeah. If you have a look here, so we're getting push up, push up, push up. This is, there is some divergence there, but it's really just a mess. Like there's nothing really definitive. So I think they're just like messing around with everybody. It's just manipulation. This one's stronger. See how you got your W formation here? That's a stronger kind of like push into that, but then it goes nowhere. So all of this is just manipulation and them just messing around with everybody. There's no real strong move in either direction. And then if we go here. So then this is all Thursday morning and then into Thursday. So this is a nice clean M, but this is actually the reversal pattern, even though it's super, super messy. Like this is just absolute garbage. It's almost impossible to trade when they're doing stuff like this because there's no strong patterns, there's no real definitive move, and then all of a sudden it just dumps out of nowhere into Asia. So this will happen like quite a lot. Like it's just a big mess. And these are the days that you look at it and you're like, I'm just gonna go and have a day off. Don't stress. Because if you were trying to trade this in New York, you would have just been stopped out because you would have gone long here and got stopped out. You would have gone long again, you got stopped out. It's like an absolute mess. And there's no real strong M formation for the reversal. But then we do get the big dump in Asia. So I'm glad that I would have missed something like that. If I'd been trading into New York, I probably would have taken that and got stopped out if you were trading that position, because that would have been a nice entry for me. But because we traded this position and we closed out our position before New York, we missed out on all that garbage. Like, that's an absolute garbage day. So then we get over here. This is another example of the really strong trending day, just continuation down in Asia. And what actually happens is that it actually had a failure to kind of push up. We did get a breakout, but it failed to cross the 50, the 200, the VWAP. This is the 800 down here. So this is showing extreme weakness in this position. If you remember the other day when we had this breakout down, we got a nice clean W formation and a strong breakup through all of those lines. Here, we don't really have a strong W. We don't have a strong breakout through any of these. We've got a fake out into here. So there's no real inclination that we're going to get that reversal pattern into here. So when you see this consolidation and this failure repeatedly to get through all those moving averages and the VWAP, major news events, yes, there is an indicator. I think I have it turned off. There is a news indicator that will pop up down the bottom, and I turned it off because it was really annoying because there was like so much news events. I'm pretty sure you could program it to just showing you certain stuff, but yeah, there's like definitely indicators like that for news events. I don't particularly watch volume. There is an indicator. So this is actually the indicator that goes with these candles. So you can use both. So I like it because it's showing you the PVSRA plus volume. So this is actually a good way to kind of show you guys if you don't quite understand what I mean by speed volume. So this candle here has extreme actual volume, so number of trades, and then the speed of the trades, which is what creates the vector candle color. But you can see down here, these are tiny volume candles, like tiny volume, like nothing really like high volume at all, but they still change color because the speed of the transactions are abnormal. So that's what creates the PVSRA candle. It's the speed of the transactions that is abnormal to normal trading patterns. So volume itself, it doesn't need to be a large number of transactions. It's just the speed of the transactions. But then you get these really big ones, which are really large volume and speed, and then they just don't do anything. So that's a really kind of weird indication of something being really manipulated. Like this little candle right here, massive volume, crazy volume from like actual volume, and actually speed, but didn't go anywhere. It really did nothing. So this is a manipulation candle for sure. Yeah, so that's the thing. It's like for me, volume itself doesn't really, because I'm using the vector candles, I find that more helpful than actual volume. So you could say like this here, when you get these big, large engulfing candles, you can usually guess that they're also going to be large volume candles. Some people love to use volume for another confluence. If you want to use something like this, I mean, obviously higher volume on a move does add to the confluence that it's going to be a strong move. So I'm personally more interested in what the market makers are doing, which is these little candles, the colored candles. I want to see where they're pushing rather than just like where everybody is, if you know what I mean. But you can definitely add these to your charts, but it's just another kind of confluence that you can use. I don't particularly use it in this at all. So cool. Yeah, so like, and again, guys, I've pulled all these different indicators from like all these different people and put them into this pattern recognition system. And it's just like been helpful in this. It's a very specific trading method for this very specific time frame. And you'll just see after doing these charts and like drawing these charts like over and over again. I have like probably 2 weeks of videos on my YouTube channel where I go through like every day and draw the charts and do the boxes and do the trends. So if you want to kind of see that over time, you can kind of just go back. But I just encourage you just to kind of get the practice, start looking for these patterns, because the way that this works is that it's never the same, but it does rhyme, if you know that kind of saying. They do generally do a lot of similar patterns in the same time of day over and over again. So if you can recognize these patterns, then it can help you to make decisions in these time frames. So for like example, like this one, we had this almost exact same move the other day. Let's see if I can find it. This one. So we had this strong move down. So we have this really strong move down, but this was completely different. If you look at this, it's just going down, exact same shape as the other box. So this box was drawn, this angle, it's probably a little bit steeper, the other one. But then we come over here, we see it again, downtrend, but we get the W formation with the push at the break. Same thing, down pattern, W break below the session, and we get the reversal. This one, push down, failure. There's no green candles coming in. We do have a W, but there's no green candles pushing and showing this. And the green candles that are coming in are pushing up and failing. So this is a failure pattern at that, because you're not getting those same confluences that you were in the start of the week when we're looking for an uptrend. And you've added the confluence that now we're after Wednesday, we are looking to reverse. We are looking to go down. So when we get these sort of patterns, we can guesstimate that this is probably going to be a continuation failure pattern and it's going to keep going down. Once you get a little bit reversal here, it's the next day. So this is an example of a day where unless you got in up here, there's no real trade this day for us. You've missed the entrance if you're here, and you've just gone sideways in London. So this is a nothing day. Oh, that should be green. So we're looking here. We've got our Asia range. We've got a break. This could have been interesting here because if you weren't looking, this could have been an M formation. Because we're looking at these weird just like breaks of the Asia high is going to be usually a reversal pattern. But let's have a look at some of our other confluences. Oh, not that one. This one. Oh. So usually when we're looking for continuation patterns, we want our indicators to keep going in the right direction. So we do have our indicators still pushing up, which would, confirm that we're trying to keep going up, but these are also going down. So you are losing momentum. But what have we formed here? It's a triangle. So like we've said before, you can see the same patterns form on the indicators that will form on the charts. So what you can do is then use those indicators as the confluence. So if you're waiting to go up or down, you could have added to the confluence when you've got this triangle formation pattern happening. You could have gone short here, but there's not really confirmation that it's broken that trend yet. It doesn't actually break this trend, break out of the triangle until after this position, and then it keeps going up. So always have a look at your indicators for these patterns, because like there's not really a really strong triangle here. Like it's kind of messy. Maybe like you could say that's like your triangle. So, but for me, I would usually like to wait for this Asia session range with this pattern happening. And if you have a look, there's no like push in this area at all. So there's no confirmation or inclination for me to go long here because there's no real strength happening. So for me, I would have been waiting to see what happens in London before I would make a move if I hadn't gotten in down here. And then you've got that big move once you've got that pattern happening in your triangle down here. So it's just another addition to look at the different indicators and the patterns in your indicators and their relationships to each other to add that extra layer of confluence. Let's have a look. Yeah. Cool. That's why I love the MACD because it always shows you really interesting patterns and like the M's and the W's, the triangles and the levels and things. So that's why I love it. It's my favorite indicator. Then, so last one, I think. Yeah, so this is going into Friday. This was a really strong move. So let's say we were watching down here, and again, we jumped in on this really strong open. That's another thing that you will notice. If you are getting these indications and you're like, okay, I think if this happens, I'm going to go long, you really want to jump in like as soon as London opens. Like as soon as London opens, so this is like exactly like, this is right on London Open just before. If you're getting these indications and want to be super aggressive, usually it's a good move. So say I put my stop loss down here under this confirmation here, I could have gone long here once we broke out of that triangle pattern because you do usually get these nice aggressive moves on London Open. So just for example, let's do this here. We got in, let's say on these candles here. That's over 1% again. But again, this is your New York Open. So let's do like here. Let's say even just stay like here. Till the end of that 1.4. So it's almost 1.5%. If you had just gotten in at the start of London and got out at the close of London, right before New York Open. So if you just taken that one trade, that's 1.5% trade in, what is it? Again, like 6 hours. So just the in, you're out, you're in, you're out, you're in London, you're out before New York. Because again, this is what happens. This is a much more, a stronger M formation for me. So you've got this combination. There's not a lot of indicators here. Like it's not, look. Yeah. It's a bit messy because it's Friday. But you have a look here. This is your high ADR. So you're at that peak of the push for the day. So usually you'll get some sort of like reversal. Yeah, it's a bit messy. Like it's not super clean. But when you start to see this sort of thing happen, at this time of the day in that New York changeover. Let's have a look. Yeah, let's look at that. That's way messy. Look at that. So when you see these two peaks with one underneath the signal, that's usually super weak. So a lot of the times we'll see these ones where they're like M formations over the top. They're pretty weak, but when you get this first peak over here and the second peak underneath the yellow line, that's super weak. So we've got a little M formation here happening with a lower high here. So this, you could probably think that we're going to see a reversal. And then just the timing of the market too. So once you see these sort of things happening at that New York changeover, it's probably safe to get short at that point. And I actually did go short at this one. So what was that? Like 113. Let's go have a look at my Mr. Bybit. Mr. Bybit. Yeah, so there. This is so yeah, so that's the 5th, yeah? Yeah, so the 5th of September is like 113.57. Something like that. Yeah, it was around here. Right on this big move, I'm like, yeah, we're going down. So I've been holding this position since last week. I kept my stop loss pretty high because it's like it still hasn't pushed down. But let's have a look. Yes. Where this level here, so this is our 800 moving average. Actually, let me take it back. So you can see, share. Okay. So, yeah. Yeah, news. The news always, Roseanne. So always, always, always keep an eye on that Forex Factory calendar. So we can, so yeah, so this is the Forex Factory. So this is Friday, September 5th. Non-farm here. Yeah, it's fucking like horrible. So yeah, Trump fired the girl last month because the numbers are horrible and the numbers are still horrible. So it's like, yeah, but we knew that was going to happen. So yeah, so I actually went short up here, but this is also the 800 moving average here. So where is it? That's why it's always good to there it is. That was the non-farm news, so that was that huge news day. But that was my big one here, is it was this 800 moving average. So when we got these two big pushes into this big moving average on a higher time frame, that's a really good signal that something could happen. And so what they do is that they use it as an excuse to make the moves. So if you were looking at all the indicators, it was already starting to fail at this point. So the indicators were already showing we're probably going to reverse. We're hitting a major higher term moving average, and then they just dump it. Oh, so strange. That's so weird. Like we could not have known that was going to happen. And they're actually holding it here. It's now 1 time, 2 time, 3 time, 4 times. So there's one of two things that happens when you see stuff like this, is that they will eventually push it through. But one thing that I've taught you guys is that when you see green candles, remember green candles are the market makers selling. So because when we're buying, they're the ones selling into us. So when you see lots of green candles at the top of a formation that don't continue, there's probably a good chance that it's going to fail because it's the market makers pushing the price up, getting everyone really excited, like, yeah, price going up. Everyone starts buying, but they're the ones selling into you. So whenever you see lots of green candles, think sell. Think that's when the market makers are selling. So I'm not super convinced we're going to keep pushing up. That's why I'm still holding my short. I took my long down here, so I took this whole move all the way up. I've been going short and holding my short with my stop just above here. We could come and grab this up here. That wouldn't be completely like out of the question. So maybe sometime this week, because like what's today? Wednesday. Maybe in New York tonight, they come up, take this liquidity out, and then dump it. Or if enough people are going short, maybe they'll go down short because there's another big liquidity area right down here. So there's massive, massive orders waiting at about 100K to 104K. So it's a massive area that's going to be really of interest to the market makers to come and get. Like there's billions of dollars of people waiting to buy down here. So could we come up here and then go down here? Yeah, sure. There's another really massive area just above. So that's why you've always just kind of got to be aware of the up and the down because depending on which way you never really know what the market makers are going to do. You just have to be able to read the signs and be able to make decisions based on your best judgment. Yeah. Am I interpreting the candles as well as the patterns? Yes. So the pattern shape, we did do that in like week 3 or 4. There are different candle formations that do show certain like this is like a very aggressive candle moving up, but then it goes nowhere. So just because a candle is like big and long and strong doesn't mean it's actually going to go anywhere. So it does. I don't use candle shape apart from at reversal periods as too much. Like in between, I don't really kind of interpret much of anything. At major reversal points, like these sort of things, that's what you're kind of looking for. You're kind of looking for the candle color and the relationship to the other candles beside it at these major pivots. Like this is like a very classic 3 candle reversal. So it goes down, you have this kind of doji, and then it comes back up. So this is a very classic 3 candle reversal period, candle formation. But the ones I'm always looking for are like these sort of ones, which we call, it's so yeah. I do kind of use candles, but no, it's not super important if that kind of makes sense. Yeah. Like this sort of like fake out candle, yeah, you pay attention to those sort of things because that's them aggressively pushing it up and then pushing it down. So that sort of candle shape is usually a reversal shape. Awesome. Is there any other questions, guys? Like that's like, I know that's a lot of information. Hopefully I explained myself pretty good. So yeah, so next week I have a full spreadsheet of how to create like your risk profile, how much leverage you should use depending on like your risk profile, all that sort of thing. So that to give you that example where we got like basically 4 out of 5 days with a trade is not common. It's more common to get 2 trades, like 2 really good trades in Asia, and that's between 1% and 2% per trade. So, and that's on Bitcoin. So if you want to like on average have an estimate of like what you could make consistently and what I've done consistently, I would say one or two trades a week, let's just say 2 trades a week are between 1 and 2% profit. So that just depends, like, again, how much you're using, all that percent, all that sort of thing. So think about it that way. We actually probably made 5% with all of those trades because we did 4 out of 5 days. We actually got a good trade in Asia. So that's above average. If you could do more than 3 or 4 trades a week, that's really, really good. But you're really only looking to do 1 trade per day, if that makes sense. Well, win-loss ratio. My win-loss ratio when I'm day trading can be low as like 50%, because some days when I was doing day trading, I'm doing 20, 30 trades a day. But as long as your stop losses are really close and if your risk to reward is higher than your losses, you can make money at 50%. Like there's a lot of like the best traders in the world who have a 50% win-loss ratio, and that's completely normal. As long as your risk parameters are really tight. Because yeah, if you make 51% and your profit is like way more, then you're making consistent profits. It's just really like, this is a very simplified way to get 1 good trade in per day, just looking at this particular time of the day, rather than having to sit there for 12 hours and wait for that trade. Yeah, exactly. So it's like, for example, let's just do that real quick. I'll put the actual trades in. Because I use, again, super high leverage, my stops are very close. So this one here is our long position. So say we got in here. This is our break it out of the triangle. We're getting our bounce here. Let's just say we got in here. I would put the stop like just underneath this lower low, because we got the breakout, we got the green candle, it's going up. We're going to get out at the end of London. So we're going to get out here. Regardless of what happens, we get out. So your stop is at 0.1%, which gives you a 6-to-1 risk to reward. So because we wait, we have all those confluences, we are just like really sure on our position. We keep that really tight stop. To be a little bit more conservative, like if you really wanted to be safer, you could put it down below the breakout of the triangle, and that's going to give you a 2-to-1 risk to reward, which is still good. If you do that all day, you're going to make money. So either way, it really depends on, like, you can have much lower leverage and be a lot safer. So if you only had a 10%, 10x, this is going to be completely fine, with your risk to reward, because you're not really going to have the risk. But if you're using like really high leverage, you want to keep your stops pretty tight. Otherwise, you're going to lose like 100% of your move all the time. So let's go to the next one. Let's just do a couple down here. So again, if we jumped in here, so this is well, that's London open. So let's jump in. We get this really big move. This is London open. We get it just under that consolidation here. This is a very aggressive entry. And then we get out. There's that. Awesome. So even with that super aggressive entry, that's still a 2-to-1 risk to reward, because we're just really sure. We've got all the indicators pushing up. We've got all of our confluences. We're really sure. You're still got a 2-to-1, or it's almost a 3-to-1 risk to reward. And it's a very short period of time. We're in and then we're out. We're in and then we're out again, not holding on. We're not going through New York. We're not doing all this sort of stuff. This day is the one that we didn't get a move because nothing was good and nothing worked in the setups. This one here. So this one is interesting because it's debatable about where you'd want to put your stop loss. Let's go here. So I'm going to jump in here. We got this good break. Yeah, this would be very aggressive and dangerous because your stop would be down here, which is quite large. This is where you'd want to really get in. So let's say we got in here. We got in at the break here because then we can put our stop loss here. I think that's quite reasonable to put our stop loss. And then we're going here to the end of London. And so this is one of those ones that if we'd held all the way to London, we still earn profit. But what we should have done is seen this pattern emerging and we should have been like, oh shit. So we probably should have taken our profits once we saw this fake out happening. Once this rejection happened, we should have started taking profits again rather than letting it come all the way back down because that's just sad. So again, 2-to-1 risk to reward if we just taken just from here and took our first profit. So say maybe that could be something that you do in your rules, is that you take your first profit when we break the Asia range. Maybe that's something you like to do is like, I take 50% when we break the top of the Asia range if we're starting from the bottom. Like could be something that you work into your rules. And that way you're going to like safely, you're going to probably break out and keep going. But if you kept this and say you took 50% here, and then I'm going to leave 50% as my runner with a trailing stop, you would have then caught the rest of this move, which was then, again, it's like a 6-to-1 risk to reward. There's a good chance that if you'd moved your stop up, you would have got stopped out. But this is like, again, if we'd maybe had a trailing stop, it would have stopped you out as well. But if you kept a fixed stop, you would have stayed in. So this is another thing to think about when you're doing a trailing stop versus a fixed stop. If you if you had kept your fixed stop, you would have had much more profit because you would have come down here, which technically broke your entry point, but you would have kept going. But sometimes it will keep going all the way up and then keep going down before you can even do that. So each stop loss has its own benefits, but then they also have drawbacks as well. So that's why you really want to consider which one you're using because yeah, this way you would have made more money. The other time, if you're in a trending market, it could be better to use the trailing stop. For example, this is Wednesday. So going into Wednesday, knowing that we're looking for a reversal, probably don't want to keep a trailing stop because you're probably going to get a reversal at some point on a Wednesday. So maybe if you're doing a trade on a Monday and the Monday trade is going really well, maybe a Monday trade in the direction that you're going, a trailing stop is a great idea because we're probably going to trend for a few days. But don't use a trailing stop on a Wednesday when you know you're probably going into a reversal soon, which is what we got when we came into the next day, we got the reversal. Yeah. Yeah, no, I love this trading view. Yeah, so again, like if you guys can, I love TradingView. It's just, I think even just the basic step up package is, I think you get like 5 indicators. I think it's really useful and definitely worth the money. I think it's like $30 a month or something like that. But yeah, if you guys can definitely want to get even just the next step up, there's so many cool things you can do with TradingView. And we'll just do one more. This is like a short. So let me go over here, we do the short. So we got our short here, we got our M. This is our stop loss here, just above that peak. We're closing it out on New York. So we're closing it out here. And there's our risk to reward ratio is 1 to 4. So even if those are the only 3 trades that we got, because that's the shitty one, that's one. So what's that one? That was 1%, 1.3%. That was 1.3%. And this one, let's do. So we'll get on this one, same thing here. This is the big one. Okay, so if you held it here, you'd come all the way back, but 1.5%. So if you'd sold this particular one, if you'd taken your profit when we hit this vector counter recovery zone, that would be 1.5%. So they're your trades for the week. We got 1, 2, 3, none on that day, and then 4. Again, that's a lot. So if you can get even 2 trades a week at 1 to 2%, I think that's going to be really doable, and you could do that consistently over time if you were just literally looking at this time frame every day. So you come in at 3 o'clock. If you're in my Australian friends, come in at like 2:30, 3 o'clock, start drawing your boxes, keep an eye on it between 3 and 5 o'clock. You'll have usually I do between 3 and 8. That's kind of like the time that I'm looking, which is you get home from work or get home and you're just chilling out and watching. Just do that every day and you're gonna find at least, not financial advice, but I think you can find at least 2 trades a week. So yeah, does that sound good? Awesome. Is there any? Yeah, so Roseanne, I did the stupid discount one. I bought a year of the really high one, and it was like 260 US, it was like 400 Australian. But it was 12 months of the super premium trading view. So I've got that's why I can have so many indicators and stuff. So it was a big investment, it was like $400. But now I've got, and that was 60% off, I think. So if you keep an eye out for the deals, they does go on sale quite often, during the week. So during the year. Yeah. Yeah, that's great. Awesome, guys. So is there any other questions about any of this? Because it's now after 8:30, so I've been keeping you a little bit too long, but awesome. Yeah. I'm obsessed. So yeah, I don't want to think about how many hours I've spent looking at charts. So I think that's another reason why I like all the colors, because it keeps me interested. It keeps my ADHD brain occupied with all the colors and things. So yeah. Any other questions, guys? Otherwise, I'll let you go. And again, yeah, if you want to watch me doing some more of these, go check out my YouTube channel. I did a bunch of lives a while back, just going through this every day and showing all of the charting. Yeah. Yeah. So if you're in Australia, so come in at between 2:30, 3 o'clock, draw your charts. And then for me, I have TradingView on my phone. So it's once I do all my analysis on my computer, but then I just have it on my phone. And so you can just be watching for these sort of things to happen. You can set up alerts. So you can set alerts on the top and the bottom of the chart so that you can get alerts if it breaks the Asia high, Asia low. But then definitely try and come back for 4:30, 5 o'clock for the London Open, because you've seen on these couple of days, sometimes you can just jump straight in and you get these big powerful moves right at 5 o'clock. And then you can just kind of get in and then get out. And again, try and make sure you're out before 11, before New York, before all the crazy stuff happens. And that's literally all you have to do every day. Awesome. Yeah, great, guys. Thanks. And I will see you all next week.